In 2025, the Indonesian Rupiah, IDR, experienced significant depreciation, reaching levels reminiscent of the 1998 Asian financial crisis. A combination of domestic policy decisions and external economic pressures influenced this decline. Throughout early 2025, the rupiah consistently weakened against the US dollar. On January 1, 2025, $1 equaled approximately 16,735 IDR. By March 26, the exchange rate had deteriorated to 16,580 IDR per USD, nearing the 1998 low of 16,800 IDR. The average exchange rate for 2025 was approximately 16,361 IDR per USD. President Prabowo Subianto's administration introduced expansive social spending programs, including a $4.29 billion free meal service. Additionally, the establishment of the Sovereign Wealth Fund, the Nantara Indonesia, raised concerns about fiscal responsibility and potential political interference in financial matters. The U.S. administration's trade policies, particularly the announcement of new tariffs by President Donald Trump, contributed to a strengthening U.S. dollar, further pressuring the rupiah. Global uncertainties, including fluctuating commodity prices, also played a role in the currency's decline. The Jakarta Composite Index experienced a sharp decline of 7.1% on March 18, 2025, reflecting investor concerns over fiscal policies and economic stability. This sell-off led to significant capital outflows, with foreign investors withdrawing over $2 billion from the stock market during the year. In response to the currency's decline, Bank Indonesia intervened in the foreign exchange market to stabilize the rupiah. Edi Susianto, head of monetary management, attributed the depreciation partly to U.S. trade policies affecting Indonesia's export-dependent economy. Additionally, President Prabowo planned to meet with investors post-Eid al-Fitr to address concerns and clarify government policies. The rupiah's depreciation led to increased import costs, contributing to rising inflation. This economic strain dampened consumer spending, particularly during the Eid al-Fitr celebrations, with a 24% drop in travelers and a 12.3% decrease in consumer spending compared to the previous year. Analysts predict that the rupiah may continue to face challenges, potentially testing new lows if political and economic uncertainties persist. The government's ability to address fiscal concerns and restore investor confidence will be crucial in determining the currency's trajectory in the coming months. The Indonesian Rupiah, IDR, has experienced several dramatic declines over the years, often marked by economic, political, and external challenges. The phrase, "the fall and fall of Indonesian Rupiah," refers to these continuous depreciations, with key moments being deeply impactful not only for the currency but for Indonesia's economy as a whole. Here's a look at the key periods where the rupiah suffered significant declines and the factors behind them. One of the most iconic and catastrophic declines of the rupiah happened during the Asian financial crisis, 1997 to 1998. In 1997, the rupiah was trading at around 2,600 IDR per USD. By early 1998, the currency had plunged to over 16,000 IDR per USD, a staggering devaluation. The crisis was triggered by the collapse of the Thai Baht, which caused a ripple effect throughout Southeast Asia. Indonesia, heavily reliant on foreign debt and vulnerable to external shocks, suffered a financial meltdown. This led to inflation, poverty, and social unrest, eventually contributing to the downfall of longtime President Suharto. The 2007 to 2008 global financial crisis, GFC, caused a global recession and once again put pressure on emerging market currencies, including the Indonesian rupiah. Although the rupiah did not experience a collapse as severe as in 1998, it weakened significantly. It dropped from around 9,000 IDR per USD to about 12,000 IDR per USD during the crisis. The decline reflected investor anxiety, a contraction in global trade, and a fall in commodity prices, particularly oil and minerals, which are vital to Indonesia's economy. The Indonesian government and central bank intervened in foreign exchange markets and reduced interest rates to mitigate the depreciation. The rupiah stabilized by the end of 2009 as the global economy recovered. Between 2013 to 2015, the Indonesian rupiah faced another challenging period due to falling global commodity prices and a tightening U.S. Federal Reserve policy, leading to significant capital outflows from emerging markets. As one of the largest exporters of natural resources, Indonesia's economy suffered from the drop in prices for commodities like oil, coal, and palm oil. The decline in export revenue and foreign investment hurt the rupiah, which weakened to about 13,500 IDR per USD by 2015. The anticipation of higher interest rates in the U.S. prompted capital outflows from Indonesia as foreign investors sought safer, higher returns in the U.S. This further pressured the currency. The COVID-19 pandemic led to another sharp depreciation of the rupiah, along with a global economic slowdown. The rupiah fell to around 16,500 IDR per USD by the end of 2020. The pandemic led to reduced demand for Indonesian exports and heightened investor concern about the country's economic future. Investors flocked to safe haven assets like the US dollar, which pushed the rupiah further down. Bank Indonesia and the government took measures, including stimulus packages and interest rate cuts, to stabilize the economy and the currency. However, the pandemic underscored the rupiah's vulnerability to external shocks. In 2025, the Indonesian rupiah is once again facing significant depreciation, largely due to internal and external pressures. The government's fiscal policies, including increased public spending and the creation of a sovereign wealth fund, have raised concerns among investors. The Indonesian currency came under pressure, reaching levels nearing the 1998 crisis lows, with 16,600 IDR per USD recorded in March 2025. The rupiah's weakness has also been driven by global factors such as the strong US dollar due to rising US interest rates and trade policies. Indonesia's reliance on exports, particularly commodities like palm oil and coal, leaves it vulnerable to global price fluctuations. The ongoing political landscape and concerns about policy continuity under President Prabowo Subianto's administration have also contributed to a loss of investor confidence. With the rupiah weakening, inflationary pressures have risen, leading to higher import costs and a strain on consumer spending. The currency's decline has hurt Indonesia's purchasing power, particularly for imported goods, and contributed to a reduction in consumer activity. As a major exporter of commodities like oil, coal, and palm oil, fluctuations in global commodity prices directly impact the rupiah. When prices fall, the economy suffers, leading to depreciation. Indonesia's political challenges, including corruption scandals, government changes, and lack of investor confidence, can create volatility in the currency markets. The rupiah is highly sensitive to global events like financial crises, changes in U.S. monetary policy, and geopolitical tensions that influence investor sentiment. High inflation and foreign debt obligations, especially when denominated in foreign currencies like the US dollar, place immense pressure on the rupiah. Shifts in foreign investor confidence, especially in response to internal economic policies, often result in capital outflows, which weaken the currency. The Indonesian rupiah has faced significant challenges over the years, experiencing dramatic falls due to a variety of internal and external factors. From the Asian financial crisis in 1997 to the COVID-19 pandemic in 2020, and the ongoing fiscal and political challenges in 2025, the rupiah's volatility highlights Indonesia's vulnerability to global economic trends and domestic policy shifts. While Indonesia has implemented measures to stabilize the currency, such as market interventions and fiscal reforms, the rupiah remains susceptible to forces beyond its control, including global economic instability and the country's dependence on export revenues. The fall of the rupiah is a reflection of these ongoing struggles in an ever-changing global economic environment.